prices and wages. Firms cannot charge whatever they want for the price of goods and cannot pay workers whatever they want. The wage between an employer and an employee is negotiated. As something gets more expensive, more people are willing to produce and sell it. This is because people who sell things want to make money. This is why you'll often hear people say, hey, you should be an air conditioner repairman. I hear they're making a lot of money. As the price of something goes down, people want to buy more of it. For example, have you ever been at a supermarket and see something on sale for really cheap and you want to buy it just because it's so cheap? That's what happens with demand. As the price goes down, the more quantity people are willing to buy. This is the opposite of supply. For supply, the lower the price, the less people are willing to sell. Everyone wants to sell high and buy low. The sellers and buyers eventually agree upon a price, and this is why a loaf of bread at a supermarket doesn't cost $100. The supermarket would love to be able to sell loaves of bread for $100 each, but if they tried to, they wouldn't sell any bread. Would you buy a loaf of bread for $100? No. And if one supermarket tried to sell for $100, everyone who wanted to buy bread would just go to another supermarket. And this is why competition is so important, having multiple supermarkets so that one supermarket can't just sell loaves of bread for $100. If that is the monopoly rate, but I'll get into that later. Wages work the same way. In this case, the worker is actually selling himself in the matter of wages. So in the case of labor, the worker is the supply and the employer is the demand. And the employer and the employee negotiate a wage. And this is how a wage comes about. If the employer decides to pay 1 cent an hour, nobody will work for him. If the employee demands to work for $1,000 an hour, and let's just say this is your average slob with a high school diploma, then this guy won't get hired by anyone by demanding $1,000 an hour. And so the employer and the employee, through negotiation, agree on a going wage. And on a free market, both parties must agree. And there's nothing nefarious about this. What happens when you put a minimum wage? Well, it's very simple. Less people get employed. Sure, the average wage will rise, but less people will be earning wages. Because a minimum wage is saying that it is illegal to work for less than a certain wage. So if you want to work for $3 an hour, that is illegal. Maybe you do want to work for $3 an hour just to get the work experience so then you can get promoted and move up the ladder. You know, you work for $3 an hour so that the company that you're working for may say, okay, you're actually worth, $7 an hour after seeing your work, so we're going to up your pay to that. But with a minimum wage, that is illegal, and your employer could get thrown into prison for that. Now, this does not immediately lead to lower employment levels because firms have an entire capital structure built up. So if a minimum wage law is passed, it may make more sense for the firm to just pay the higher wages than have to restructure. However, this does lead to some restructuring, but more importantly, new firms or industries will take the minimum wage into account and won't hire as many workers on any new plants and will slowly phase out labor and get more machines, right? Because the minimum wage has made labor more expensive. Now, for very skilled workers like a doctor, the going rate for them is higher than, say, some college kid. And so the doctor will be able to negotiate a higher wage than a college kid. And by negotiate, I don't mean that the employer and the employee get together, talk to each other, and haggle personally. Just that the employee will look through all the classifieds and seek out the best deal. You call this meta-haggling. I don't want to get into that. Also, the notion that we can raise all wages is nonsense. Money represents stuff. There's only so much stuff being produced. And if all wages are raised, that doesn't mean there will be more stuff. It just means that there will be more dollars floating around. And the result is that stuff will cost more dollars, right? If you raise all wages, you're just raising the money supply and raising the price of goods. So if you double wages all across the board overnight, all that will happen is that prices will then double and wages will double, but it won't matter.